So finally, a deal of some sort. It still needs the vote, but do you think we've already cleared this hurdle in the U.S.?
I think so.
Yeah?
I think that the Americans cannot really, go into a situation where there's no deal. I think that they will make it work, yeah.
But what kind of deal is this? I mean, we're just looking at $1 trillion in
I think that it will go in a few steps.
Yeah.
I think that the first step is maybe something concrete to the tune of about $1 trillion. But I think that later on they will have to strike a second kind of deal to cut back a little bit more.
But they say that this lasts through the presidential election, so they don't have to rehash this next year when they're trying to campaign for the White House. But in terms of there's circuit breakers here, lots of details really. So circuit breakers and no tax increases. I don't know if this is enough for the ratings agencies. What do you think?
No, I don't think that it will be sufficient. I think that S&P has made a public announcement that the U.S. will have to cut something like $4 trillion. So this is only $1 to $2 trillion. So I think that just that the social benefit commitments in the U.S. were just so high. So I think that at some stage that will have to be cut back.
Yeah.
And I think that the details will have to be worked out. Maybe it will not be under Mr. Obama. Maybe it will be under someone else. But I do think that the debt situation in the U.S. is getting quite serious. Yes.
Yeah, some are saying if you dropped any investor onto the planet right now, they'll take a look at the fiscal situation in the U.S., the debt burden, the amount of benefits for Americans. You would say AA. It's not AAA in their view.
That is correct, yes.
So is it that big of a deal if the U.S. loses the coveted AAA rating?
I'm not quite sure whether it is such a big deal. I mean, have a look at Japan, right? Japan actually is on the AA rating or lower than that. But, has it mattered? I mean, the yen is strong, interest rates are low. So I think that at the end of the day, it's more to do with the financial environment in the economy itself. So, I mean, in fact, the 10-year bond in the U.S. actually dropped by 15 basis points on Friday, even if there was no deal. So I don't think it matters that much longer term. In the short term, yes, but longer term, no.
I think people are forgetting in the whole mix of what's happening in Washington, D.C. I mean, did you take a look at the growth figures that we got on Friday?
Terrible.
Yeah,
no,
terrible. The S&P 500 is down about 1.5% at some point, and then the expectation that the deal came through in Washington. We saw a rally into the close.
Yes.
But, U.S. growth is anemic. It grew at 0.4% in the first quarter. Shouldn't there be some concerns there?
Yes, that's what we are more concerned about. We're more concerned about the domestic growth in the U.S. and earnings per share growth and so on and so forth. So that's what matters more to us. I think that, whether the U.S. has a AA rating or AAA rating, at the end of the day, is not that big an issue.
Okay, so what are you doing then? Is Baring Asset Management buying into the U.S. at all? Are you buying into any equities, any bonds?
We have been more underweight in developed markets and still overweight in Asian and emerging markets, because here we see stronger demographics, a better sustainable development in terms of industrialization, urbanization, and also the valuations of equity markets in Asia are not that expensive.
Cheap. Everyone keeps saying valuations are cheap.
So, you have growth, you have the strong balance sheet, and you have reasonable valuations. And you have liquidity, which is also quite good.
But you also have inflation. I mean, take a look at the Korean numbers we got this morning. Inflation higher than expected.
Correct.
Exports blazing.
That was very strong. I just saw that coming through your Bloomberg screen.
But you favor Korea. So
yes,
do you
we
want
are
to take
very
a step
overweight.
back, or do you
no,
want to put more in?
Korea.
Oh,
we
really?
still overweight Korea. And it's not a play on the U.S. The Korea is a play on emerging markets, and also a play on the fact that the Korean corporates have become a lot more competitive because the yen is so strong. So the Korean won relative to the yen is very competitive.
Yeah.
So what we're looking at is a very strong growth from Korean exports to emerging nations, not so much to the U.S. itself. Obviously, the U.S. is important, but emerging nations' demand for Korean goods is unbelievable.
I bet.
So that's what we play. Yeah.
Do you own a Samsung TV?
So
I can show you.
Yes, I do. Yes.
Personally.
Yes,
all right.
yes,